The following is a presentation of TFNN. It is now time for Trade What You See with your host, Larry Pesavento. Now, Larry Pesavento.
Hi everyone, Basil Chapman sitting in for Larry Pesavento. Larry's away, so I was able to manage to free up some time for this. I always love doing it, and it worked out. So when I get a chance to do this hour of Larry's, I always feel it's incumbent upon me to move towards the futures, to look towards the idea of the areas that he normally looks at, but I absolutely need to do it in my terms. That's using the Chapman wave methodology. While I always look at the Gartleys and the butterflies as they are unfolding, my technique says that I've got to stick with that discipline. Very often, what happens with the butterfly or a Gartley, a butterfly expands the length of the last leg, extends it further than you would have thought. That's why it goes from the Gartley to the butterfly pattern. Funnily enough, in fact, I've got a chart somewhere over here. My old hand charts that I used to do, pencil and rulers back in the late 70s, early 80s. And because I used to extend the lines, very often they created these triangles. Little did I know that one day it would become an official thing called a Gartley or a butterfly, and that it had actually been done back in the 1920s. But it was very easy for me to pick up on some of those because they match very much the patterns that I'm looking at. The difference is that if the pattern says that I'm in leg C, but it's a Gartley or whatever it is, I still have to wait for that requisite leg D. Just as I'm sitting and waiting for the cues to make that leg, it's the same as the NQ. If I right here, if you're looking at the tiger, the charts that you can get, these are, to use this technique is so easy. You go to the front page of TFNN, go to the right hand corner, you'll see 3 icons. Just click one of those, and pop comes the chart right there. Here I'm showing you the 120-minute chart on the right, and this is the E-mini September contract, and the daily on the left. It's made that peak D. I don't want to make it too complicated. It's using the phantom peak. In other words, there was a potential peak right there. I said phantom peak A, and this was right on the 27th and 28th of June, where it was 16, 14, 25, and 16, 14, 50, 25 cents higher. I kept it in mind that I might have to use it, and because the S&P made its stop, it coincided exactly with the fading technicals. As you can see, the green line here and the white line here shows you that at that high, there were much weaker technicals. Now, Larry doesn't use any of these, doesn't use moving averages, anything. So for some of you, it might be somewhat new. Let me just briefly explain. I wonder if I can do that now. I think I lost the chart. Yeah, I did. I'll try to find it during the break. But in my CD introducing the Chapman wave methodology, I'll go through these things. Now, let me just show you something. There was think of this as an arch formation, a double arch formation, because it made it's like an inverted cup and then an inverted handle, and it broke to a lower low. That says in the 120-minute chart that this rally in the stochastic, this is the bottom here, is the stochastic, the red and green lines to the upside, and this is the MACD on the upside, has fulfilled its obligation of giving a great liftoff from the low of 1675.25 earlier this morning. And now it's making an A, but it could be a peak A if there's no new high bar at 1688.25. That's like 2 to 3 points higher than I anticipated it would go. I thought it could hit 1685, even 1687. It went to 1688.25. But now it's very important. If there's going to be a failure pattern, this is not uncommon, especially in the futures. You see all these big spikes to the upside that failed. Well, this is the same thing here. We will know it's failing if by this afternoon the S&P is below or at 1681 or lower. If for any, I don't care what the reason is, if it takes out the high of 1688.25 in the next 2 hours, That's very positive. And I have anticipated that the E-minis could rally even further to retest the highs all the way up at the 16 and 91 to 95 area. It's actually 95. I'm saying 91. I don't think it'll go above 91. So that's that. Now let me just get rid of this, and I'm going to go to the greater details. This is Larry Show called Trade What You See. I also wanted to do some of the commodities. Let me just run this by you. EUR USD. That is the euro. Now, the object in the Chapman wave methodology is to get you to at least a peak D. And lo and behold, what did it do? It went from 1.27, it's actually 1.27546 back on the 9th of July. It goes peak A. Then it makes by 0.001. If it goes higher, then the 1.32050 of the 11th, it starts leg B. And there it does it. That's called a floating ladder. So this is B, that is B, still leg B, and all of a sudden it becomes peak B at 1.32962 on the 26th of July. Pulls back, goes to peak C, pulls back. Then there was a left side, right side price time match. This is another technique that I use, saying that the 1.34153 was a target zone, but my suspicion was that it could fail just below that. Why? Because the technicals were not that strong. And when you look at peak C, look at the way it went to peak F right here. See the way the MACD and the stochastic is? Look how high. When it went to peak C over there, look, the MACD was higher than it was down here, but not nearly as high as it was there. The stochastic was about the same, but look what happened when it went to peak D on the 8th at 1.33995, just underneath, well, a little bit more than a little bit, underneath by 0.05, that previous peak F high. The stochastic and MACD were much lower. So what happens? You get your pullback. If the price now closes decisively under the 9-period moving average, I would have to say under today's low of 1.32765. I hate all those numbers. That would say daily is in a sell signal, not a sell mode, just a sell signal. Be careful. You could still go higher, but it's bumping to a lot of resistance. The weekly says, yep, that resistance has to be, you have to go to a higher high above last week's high to even think about getting, obviously, to a leg D in the weekly chart. And the monthly says, hey, as people have asked me for a while now, where do you think I think it's going? I think that the euro-US dollar currency pair is just trading it's just in a range. That's all. Nice moves if you're a short-term trader. Looking out, there are many other currencies. Look at the USD JPY. Now, these are bigger moves, much nicer. This is on now to the downside. Truff D, it could still go lower based on that H pattern that I always talk about. They could test the bottom. So that's something to consider. Now we go to the dollar, DXY. And the DXY is, in fact, at 81.32. Nice bounce. Where did it stop? Right on that resistance of the 9-period exponential moving average. Now, if the dollar, I'm saying if, I don't think it looks to me like dollar has more downside testing to do. But if the dollar is able to clear the 200-period moving average of 81.82, then all of a sudden this candle becomes a target, and that's the candle of the second going all the way to 82.49. Then I think, for other reasons, the GLD becomes a little bit vulnerable to a pullback. So in the meantime, if you're in the long position at a great entry point in the ETFs based on the gold, spot gold, like the GLD and others, then I'm suggesting stay in the position for now, because this is, first of all, a very oversold bounce. There's a tremendous move, a percentage move in some of the very low-priced stocks, actually even in the middle-priced stocks. Nice percentage moves. It might be a little too much too quickly. I don't know. What you need to see is the GLD breaking above 130.38. That was the low of 619, the 19th of June. And it needs to clear that it really needs to get to the 131.5, 132.5 very quickly, and then I'm going to be very impressed. In the meantime, I am impressed at the takeoff, but I haven't yet got the conviction in my intermediate term signals, the weekly and the monthly, yet. That's absolutely not to say it can't happen, but I'm just saying, looking at it right now, third hour of the first trading day of the week, I'm saying, okay, let's see what happens. You need to see the GLD close above 130. I'd even say 130, 150 by the end of the week. Probably, actually, it needs to be even more than that. But 130, 150 is the minimum on Friday at 4 o'clock. So with that in mind, I'm just going to do this right now because trade what you see, 877-927-6648. Number to call. Let's go to Mike in Long Island. Hi, Mike. How are you?
Good, Basil. Thanks for taking the call.
My pleasure.
FNF.
Okay.
Can you look at that? We looked at that a while ago. What do you think?
We looked at it a while ago. As I recall, this was like a long-term position that you had mentioned that, I'm not sure if you were looking at it for some other people or whatever, but if I recollect, I said long-term, I can see it pulling back, but I would keep the long-term position. Shorter term, I'd recommend it maybe taking a little bit off if it pulled back under a certain number, and I just don't remember right now. But basically, FNF is Fidelity National Financial. It's trading at 24.77. It's very interesting. I was asked if during the break between my show and Larry's show if I would look at J.P. Morgan. J.P. Morgan. This is Fidelity National Financial. Is more. This is not a money. What do they call the money center bank? This is a regional bank, right?
No, it's a title insurance company. It's a.
Oh, title insurance. Thank you. Let me just put that down so I know. Title insurance. Okay, good. Actually, I was looking at some very interesting things in the. To do with mortgages and insurances and things like that. So this kind of fits that category. This is what I'm looking at now. I'll go through it in sequence. The daily has made a peak F from the recent pullback. So it made a peak D high. I call that was really a perfect rogue wave. It was going down, looked like it should continue going down. Instead, it has a sudden spike to 27.17 on the 28th of May to make that leg D, and the same bar closed negatively, and then it kept going down after that. It went to a doji, a beautiful candle doji low of 21.99 on the 24th of June, and now it's gone peak A, B, C, D, pulls back, holds the 9-period moving average, makes an E and an F. That's what that pattern that I call. It's that right shoulder sequence in the stochastic that allows for the bump. But in this case, it also turns out to be the M pattern of the MACD. Wow, this is really an interesting chart to look at. It's giving a lot of signals. I'm going to talk about this as soon as we get back. We're looking at F and M for Mike, and it is, in fact, Fidelity National Financial, Title Insurance. We'll be back with Ellen and... Yeah, with Ellen. After Mike and Ellen straight after this.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC. McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX. With over 3 decades of commodity trading experience, Andy Hecht has developed a system that combines both technicals and fundamentals. He calls this approach Technomental, and now you can put it to work for yourself with his brand new service, the Technomental Commodity Report. In this weekly newsletter, which comes out each Thursday morning, Andy gives you his analysis of the market price direction bias using fundamentals, and then specific trade recommendations including entry and exit points using technicals. The recommendations in the newsletter are always based on stocks and ETFs, so a futures account is not required, and Andy will often use options in the recommendations as well. Andy will tell you where to get in, where to get out, and he'll outline the risk-reward profile for all recommendations. To get your month-long free trial to the Technomental Commodity Report by Andy Hecht while locking in the low introductory rate, visit the front page of TFNN.com today.
Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi everyone, we're back, and during the break I just did a little analysis of JP Morgan for one of our fabulous demos, and I'll talk about it in a moment, but I also have another question there from Angie. We'll get to that as well on Oracle. But we are on with Mike in Long Island, and we're looking at a trading ban setting up for Fidelity National Financial. Now, what's really important about this, there are two competing chart formations in the weekly chart. If it's able to get, because it's acting quite nicely today, up 24 cents at up 0.98 to 24.83, had 3 good days, not strong, but good up days considering what the general market's doing. So this is my analysis. I have very clear parameters. If FNF breaks down and takes out the 23.85 low of the week of the 19th of July, I would again suggest taking a little bit of money off as security. Keep the call at this particular point. But it's a heads up to say that the monthly chart, the Roman candle of 3 months ago, that was the month of June, if it gets anywhere into the 2280 area, there's just a really good chance it's not only going to test the low of 2199, it's going to head for 20.70, the 200-period exponential moving average. That's just a heads up to say that's what I'd be looking for if there's a failure. If in perchance it's able to get from the 2482 level now by Wednesday afternoon to Thursday morning, if it's able to take out the high of last week of 2540, and that's only 60 cents, it should not be a big deal if this stock is still internal strength and there is enough firepower left from the monthly chart strength. Then I'd say that's really positive. what I would do is raise my stop on a certain percentage, a certain portion. It could be another 1/3 or another quarter, whatever it is, a small portion. I would raise my stop on that particular portion. And if I get taken out with like a 1-point trading stop, I'm out of that particular portion. So it's acting well. It'll be acting much better if it goes into the 25, what did I say it was, above 25.40. It'll really be impressive this week if it does that. But if it starts to fail, I would take a little bit more off, and I hope that helps you.
Yes, excellent. Thank you very much.
Okay, because the monthly chart is just now showing signs that could have been a possible peak G, and it needs time to digest really big gains from the 12s all the way to the 27s. Thank you so much for calling, Mike. I appreciate that always. Much. Let's go to Ellen in Tampa. Hi, Ellen. How are you?
Great, Basil. I want to thank you for all that you've taught me. It's taken a while to understand it all, but you're very good.
Well, Ellen, doesn't it always sound way more complicated? And as you're doing it, you say, hey, that's a lot easier than it sounds.
I think that your musician skills helped you with developing this.
Well, people always say to me, how do you get from music to the stock market? And I say, one word is absolutely common. It's probably common to life as well, timing.
Yeah.
When you're playing the orchestra, if you are the bass drum, I play clarinet, but if you were the bass drum, you do not want the orchestra to finish boom, 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 and then you go boom. You do not want to be late. And that's like the market. Oh, I have a cartoon. I don't know if you've ever seen it in my CD introducing the Chapman Wave methodology. I have a cartoon. Right there, I used to have the numbers of the slides. While you're mentioning it now, you want to look at a particular stock, and as I've got the stock up, I'm going to find I'll find it.
It's the cartoon.
The cartoon. I want to find it because it's so appropriate to what you just said. It's not that. Market Whipler. Of course, I can't find it. I've got it written down. I just can't read my handwriting. So you want to look at SSYS, right?
Yes. I want to know when to get in again.
Okay. Now, this is one that you had looked at, you had bought a while back, even though it had rallied, and then it did nicely, but now you're out. Is that correct?
I'm out. Okay.
So I'm going to do this. I looked at it this morning. Well, I looked at it over the weekend, and I said, wow, who knew? And then when it did the action this morning, I said, oh, no, not another one that I've missed re-entering. So let me do this. I'm going to make a suggestion, and that suggestion says, right now, I would actually start a small position on it, and then I'm going to come back after the break, and I'm going to explain what I'm looking at, just so that we know, because it's brand new leg B. I have no other way of counting this right now. That's the way, and we'll be coming right back with Ellen looking at Stratus Systems. It's one of those 3D modeling, printing, and prototyping places. Man, I'll tell you,
With the stock market flirting with all-time highs and volatility back, now is the perfect time for a 2-week free trial to Market Insights. On Monday, June 24th, Tom O'Brien closed out all 5 open positions in his daily newsletter, Market Insights, with all trades being profitable and ranging from a 2.23% gain all the way to more than an 11% gain in just one position for an incredible 32.7% profit combined between the 5 trades. Let Tom O'Brien's years of market experience work for you. If you'd like to see for yourself what kind of trading newsletter Tom O'Brien delivers to his clients each morning, then now is a perfect time to sign up for a 2-week free trial to his daily newsletter, Market Insights. In a volatile market like we currently have, the potential for fast market moves like we've seen recently is a trader's dream. So don't wait any longer. Sign up for your 2-week free trial to Market Insights today at the front page of TFNN.com. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN. No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi everyone, Basil Chapman, Tiger Technicians Hour, and I actually have that cartoon. I found it. There it is. This is on slide 59 of the 476 slides in this PowerPoint presentation of my CD introducing the Chapman Wave methodology. It says, there's this one guy, him and his wife, it's all about them, and now this guy is talking to a friend, and the friend says, the stock market is like a finely tuned orchestra, all these sections rotating. Then the next little cartoon says, then together they build to a huge final crescendo. And then the guy, the husband guy says, and as usual, I'm buying when the bass drum hits the last climactic chord. So I mean, this is exactly as you would feel right now if you were to buy Stratus Systems Inc. Now, let me explain what I'm looking at here. There is always, I mentioned way back, and I said to subscribers, I'm anticipating that we are going to get in on the long side to Tesla. Well, I missed by a couple of points getting in, and after that it was too scary. Scary in the sense that if I had bought it, it would have been fantastic, but then if I had bought it at that alternate count CG back on the 15th of July at 133.26, well, it's had a little bit of a slide from 136 to 104. I mean, that's scary stuff. And then it started on a brand new move, and it went to peak ABCD, spiked, and these news-related spikes to either all-time highs or not necessarily always all-time highs, but to a peak D, E, or F is where I get really concerned. Well, Tesla spiked to 157.86, And I remember hearing Dave White, I heard him on his show, and he was also talking about the fact that it would be better to wait for the earnings report before you even thought about shorting. Well, I looked at it, and there was the doji candle at 158.88 that was on the 8th of August. Next day, that was on Friday, it was an inside day, and today it's gapped down. Now, I'm not sure if it's gapped down. I think it's 150.46 was the low, and 150.50 is the high. So it's just touched the bottom of that candle, so it's not an island reversal. However, that peak says be careful. That is something very different, because in the weekly chart it's leg E, possibly a peak E. Monthly chart it's a vertical move to E. It is highly vulnerable right now. So now let's go back. I want you to show comparison charts of stocks going to all-time highs at these scary levels. But all of a sudden, that peak F top that gave a really good pullback from 90.44, I was looking for round numbers. Yeah, the day before at a 94 round number high. I couldn't tell you how many stocks I'm writing down, and I'm mentioning to subscribers that are having round numbers either at the high or the day before, the day after. It is uncanny, and dojis at the same time. So it went a little bit higher to the peak F top. Then the Chapman wave peak F is the sixth highest top at 96.44, and then it pulls down, and that is a pretty big pullback in Stratasys Inc. It went to 83 round number low. These round numbers are just beautiful things. Round number. And then what does it do in 3 days? It's gone from 83 to 99. Today's high is 100.84. Now, I'm saying I've got this in a buy mode. I have two ways of looking at it. One is, are you nuts? and the other is, this is Larry's show, which is trade what you see. And all I can say is, if I'm correct, SSYS is going to go higher because it was actually one of the better looking ones in the group. There's another one called DDD. Whoops, I wrote it on the chart by mistake. DDD Systems, DDD or 3D Systems. That made a peak E, and now it's a very strong move in the candle. It's made a kind of a rectangle in the weekly. You know what? I like the sector. I don't care what the market is generally doing. There's always one sector that, independent of the market, just has its own thing that it has to complete. Let me look at XONE. I think that's another one in the sector. Leg D up. I'm going to make a recommendation. I know it's really tough to do, and if you ask me, would I do it? I say I would absolutely do it. I prefer to do it with options, but that wasn't your question. I'm going to suggest you take a small position. It's at 99.82. If it's a small position, 93.10 is basically the stop that I would have. But technically, just looking at the chart, because that's the 9-period moving average, I don't think so. It's in leg B in the 120-minute chart. It's in leg B in the daily. I'm going to recommend, if you're interested in this stock, that you, rather than have, say, a slightly bigger position, I would have a slightly smaller position for two reasons. One is that I would treat it as an experiment in counter-trend stocks that, like US Steel, is right now in a counter-trend move to the upside. There are a couple of others in that area. This could very well be independent of the market. It could be where fund managers say, this is working, this is where I want to put my money. So here's a recommendation. Instead of the position I would have suggested, I'm going to make it a small position. I would actually enter it right now at 100. The stop I would have, because it's in leg B, I don't think, with the kind of strength that it's showing right now, that it should take out today's low of 94.50. To me, 6 points is, I would not have a 6-point stop on this, even though it's a small position. I'm going to recommend a stop round about the high of yesterday was 97. That's too high. I would put a stop, I think, a 4-point stop on a $100 stock, if you're taking a small position, is reasonable, and I'll explain why. If this is successful, and it's only in leg C in the monthly, and this could very well have recycled to leg F/C in the weekly. In other words, this could be leg C. And the MACD is good, and the stochastics at 76%, trying to push towards 80%. I'm going to suggest a small position with a 4-point stop, and I know this is going to be tough to do. I would say that if it makes a peak B tomorrow, but it holds your stop, the moment it crosses to start leg C, you could start another very small position, and that very small position has like a 1.5-point trading stop, which probably will get taken out, but you're probably going to make at least a point or 2 or 3 before you get taken out. And I think it's worth the experiment, because I know that you've often looked at stocks that are very strong, that tend to be towards their highs, and stocks that make new highs tend to continue making new highs. Stocks that make new lows that's their thing, make new lows. Something's bad or something's very good. So this could be in that former category. So I'm hoping that it helps you. And the other thing is just to watch it. The other thing would be to watch it and say, I would technically write it on paper. I'd be buying at 100.09, and I'd have a stop of 106.04 or 009 or something like that, and see how that works out on paper. But I'm looking at this as a brand new buy signal in the daily. I can't believe it, but that's what I am.
All right. Well, thank you.
I hope that helps you. Tell me how it works out.
I sure will.
Thank you very much. That was Ellen in Tampa, Florida. We were looking at SS Systems, Stratus Inc. It's a really good-looking chart. Let's just say, if I didn't look to my left screen out of my 7 screens here, if I never looked to my left screen, the one that I have right now with the market itself, all those indexes, I would say, hey, this is great. Wow, the stock market must be doing very well. All I can say is SSYS is looking very good right now. And in fact, the group is acting very well, and that's what you want to see. So then now we've got Oracle. Now, this is going to be interesting, because I just wrote this down during the break for my exercise book that has all these different chart patterns of all the different techniques that I discussed. I don't know how many there are. Must be 35, 40. I don't know how many pages and pages. Okay. Oracle made this is an unconventional instant restart. I don't really want to go into the technicals right now, other than to say it's in a brand new leg D. If ever there was a stock that was walking the 9-period exponential moving average, Oracle at 33.23 up 31 cents, this is it. The monthly chart made a double top, and it pulled back. It pulled back more than a half of the low to the high. The high back in May of 2011 was 36.50. Let me type that in, 36.50, 36.50. What did I say? May of 2011, 2011. And then it pulled back to, was that 24 something? Yeah, 24.72 in August of 2011. Can't remember what I said, 24.32, I think I said, 32. And now it's gone peak A, B, C, and failed just under the 36.50 high. That's why I call it the gray letter C. Underneath it went to 36.43, 7 cents, 8 cents from making a new high. Isn't that amazing how that happens? So this is, what did I say? It was 36. You know, the numbers. You got to remember these numbers, Mr. 36.43. 36.43, 36.43. And now it's pulled back under the 9 EMA, and in fact, in the monthly chart, it is above it. That is nice action. And that says it could be making a cup and handle. Not one of my favorite patterns, but a cup and handle pattern nevertheless. Okay, so first of all, the monthly chart says technicals are weak, price is held. It's not great, but it's within the middle of the trading range, having pulled back more than a half from the lip of 36.50 down to the low of 24.32 from that recent high. That says there's a good chance to try to test the 24s again, but that's just, we'll wait for any signs to come. The weekly chart is at a very strong brand new leg A. The last one failed. It went to A and then B minus. So let me just pull the weekly up and show you something about Oracle. This particular pattern is a very familiar pattern. Why? There's the left shoulder. Where's Rick from British Columbia when you need him? There's the head. And here is the right shoulder coming up. But that doesn't mean to say that it's going to happen, that it's a head and shoulders inverted, that it's a head and shoulders that's going to break down and go underneath 30 to test the 29 200-period exponential moving average. It just says there's a pattern here that you need to follow. But wait a minute. My eye says there's an even more important one, and it's called a channel. And that channel says if at any point, right there, you are coming up towards the resistance zone, let me call that green for now. Let me call this red, because this is the area that you want to look at in the Chapman wave inside track. Right there. That's the area of resistance. Right? If it breaks out above, it's very positive. In other words, if trading at 33.23, if this week it goes to 34.03 is the level, but let's do it at 34.10. 34.10, less than a point away on the upside. If it does that, I have to consider that it's a very powerful move, because the MACD would have crossed positive at the end of the day. The stochastic is okay. On-balance volume is very strong. And on the downside, now I needed to ask, I think it was Angie. Yeah, Angie, you had asked that. I don't know if you're long, you're short, if you're just watching it, if it's a position you want to get in. But I'm looking at this and I'm saying, this is exactly why the Qs are holding up quite well. Because there are enough individual stocks that are just not prepared to give it up just yet. Look at Apple. Apple, I'm going to come back to this Oracle in a moment. Apple made a peak F top that could turn out, because of the instant restart, to be B, and at 471.90, I have to call that leg C, and that's very positive. And that says that Apple is going to sustain the Qs for a little while longer. As Apple tries to get to the 480 to the 493 area, then it's going to come back sharply, retest the 465 200-period moving average, probably go underneath, and then try to go back. And it could turn out to be the stock of one of the stocks of 2013, if in fact it does that and goes right back to the most recent highs. If it fails, it's going to break down under 440 to 435. Now, I've had this H go into an M pattern, and eventually, sometime by December, I think in November, December, testing the 353 level. I don't know if I'm going to be right. That's the way it is, because so far Apple's showing very nice internal strength. Let me sum it up. The weekly chart says stick with the weekly chart. Don't get carried away looking at the daily chart. Even though 200-period moving average is important, rather draw this in, because having gone to a higher low, below, that is 385. Let me explain this. In my methodology here, there's a technique that I teach. It's called, let me see if I can find the chart. It is called the H pattern, chapter 17. For some reason, I just couldn't remember the chapter. Look at this. That's the pattern. No, this is the pattern we're looking at, right? That pattern and that pattern. In this particular instance, what we're looking at is that the H becomes an M. Even if it goes underneath the previous low, it says that the previous high is going to be tough to break. And look what happened. It took a while before it could even get to that level. In this particular instance, in Apple's case, it did not break the 385.10 level. It went to 388.87. It says it can go to or just above the previous high. I'll follow this up with Oracle and Apple when we get back.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi, everyone. We're back. Final section. Let me just do this. So Apple successfully went above the 465.75 arch high, and it is looking like it wants to close above that level at 465.85 right now. Now, of course, I do realize that it was leaked out about the iPhone. We heard about that over the weekend, etc. But more importantly, the chart pattern says that unless there is a decisive and a really distinctive move above the 480 level, closing above 480, it's starting to bump into a lot of resistance in this area. I just say be careful. If you're long, that's fine. And on a short-term trade, just keep raising your stop and at least part of your position. At any point in August, if Apple starts to pull back, I'm going to be watching real closely to see the 450 to the 444 level, how that holds in the weekly chart. So far, nice action, and it's going to help the Qs. Maybe it'll help the Qs just get to that leg D, and then we start to see a pullback. Now, back to Oracle, because Oracle's been a very strong stock. Did take a huge hit, but before, when it gapped down between, it made a peak E top at 35.40, 35.32. I was watching that closely. Yeah, 35.32. We put that in, 35.32. The reason why I'm looking at that is I'm saying that pullback from the peak E top. Actually, that's an F. No. That's not an E. That's an F. I knew no, just parallel E. Okay, parallel high 3503 goes to peak E, pulls back, goes sideways. Look, there's that H pattern, always repeating H pattern. There's the M pattern, breaks down, gaps down. 20th it closes at 3303. The next day it goes to 2998 low. Then it goes just a little lower to trough ABCD, trough D at 2986, and it starts a fabulous move peak. ABCD, unconventional instant restart, which becomes an unconventional instant restart, goes to leg D. I would suggest to you that it's fill the gap. It's above the 200 period moving average. I'm not sure if you're long or what you're looking to do. If you are long, I would stay long, but I would absolutely put a stop on some of my position. It's 33.24. 1 point lower down, I'd start to lighten up a little bit, at least lighten up a little bit. But if it takes out 31.95, the low of the 31st of July, Oracle is going to come down much deeper. Now, it needs to break on the upside. It needs to decisively break that down channel inside track. So they make it real simple. Oracle above 33.83, very nice action, and it should tackle the high bar of the week of the 21st of June. But the monthly chart is still saying cup with a potential handle. It has to hold. If it starts, as I say, if it goes into 31s, that's going to be a sign of weakness because of the MACD and stochastic being very poor in the monthly chart. So if you're long, keep holding. Start taking something off about a point lower than it is right now. You got to do that for protection. On the upside, if this leg A just continues and it gets to the 3380s, that's very closes. It has to close there or above by maybe this Friday or the next Friday without taking out the 32.54 9-period moving average support. Make it as simple as that. Okay. Now, we've got Dan in Basking Ridge. Hi, Dan. How are you?
Hi. Doing well, Basil. Thank you.
Good. Sorry, I didn't see. I had you down and I got carried away with my charts. You wanted to look at the GDX?
Well, yeah, and it's more of a just broader question. As far as you've been speaking about rotational aspects in several of the lagging sectors, and I just wanted to hear your take on the gold miners to see if that rotation is on.
Yes.
Even though we've already gone down about 50%.
I'm going to make it just as simple as possible. If all the gold stocks, whatever you're looking at right now, if they are holding well, then something like the let's just take R gold, for instance. Something like Royal Gold, fabulous move. It must not take out the low of 2 days ago. That's most important. I think they're doing well.
What's the one thing that pulls people back from the breakthrough that they're moving towards? What's the only thing that really stops people from taking action? You and I both know the answer, and sure, we can come up with the reasons why we're not where we want to be, but the only reason that we don't do more with our life is fear. Or if you're an overachiever, call it stress. Simply put, there's something that happened to us in our past that's holding us back from the life we deserve, yet you and I are okay, we're here. So why should we let our past control our future? Exactly. We shouldn't. Hi, I'm Steve Rhodes with TFNN.com, and when it comes to your trading and investing, I can help you overcome your fear of loss. Together, we'll turn weakness into strength with a system I've developed called Mastering Probability. I'll teach you how to make your money work harder for you than you do for it. I'll teach you the tools that provide financial freedom. Go to the homepage of TFNN.com, click on my name, Steve Rhodes, and begin your journey of mastering probability risk-free. It's time to become a pioneer of your future versus a prisoner of your past.